Thank you so much for being here, and I would like to introduce to the Director of Grants and Programs, William Eric Lindsay.
Thank you, Veronica, and thanks for everyone for being here. This is a part of our second summer bootcamp session. And before I begin, my name is William Eric Lindsay. Nice to meet everyone. I'm the Director of Grants and Programs. I'm just excited to get into this. But before we get to Virginia and Eurice, I just wanted to talk a little bit about our chamber and what we do here at the chamber. Here at the chamber, we have the foundation. And one of the elements of the foundation is we do this type of work. We talk about the Small Business Advancement Program here at the chamber, where Virginia and Eurice, they form part of our subject matter expert business advisory team that we have to work with the small businesses here in Washington, D.C. So obviously we don't do this alone, and some of the partnerships that we have for the chamber, you can see some of them there, and just want to highlight a few of them, are the Department of Housing and Community Development, DHCD, the Mayor's Office on Latino Affairs, MOLA, and the Small Business Administration, SBA, which is a federal government agency that we do a lot of work with. The chamber's been around since 1976. And we've done a lot of work over those years, in particular with a focus on helping small businesses expand and grow, to moving businesses forward. That's our tagline. And over those years, we've been presented as a chamber with a few awards. One of those was being ranked the number 6 top Hispanic chamber of commerce in the region. That was by the Washington Business Journal. We were awarded by the United States Hispanic Chamber of Commerce as the Hispanic Chamber of Commerce of the Year. And we were honored by the Council of the District of Columbia for having an outstanding impact on the Hispanic business community here in Washington, D.C. We are a membership-driven organization. A lot of our team members are part of the organization. I myself, not just a staff member, but I am also a member of the chamber. And you know, being a member, you definitely want to check us out. You definitely want to take part in what we do so that you can experience for yourself firsthand if this chamber is worth it. I think it is. I'm biased, but I do think it is. We do a lot in the community. We do a lot for small business. We do a lot for individuals as well. And just by being around the chamber, it'll help for you to make that decision, which I hope. And you can get to meet the staff. You can get to meet some of the board members and the president and CEO Nicole Quirega. But some of the events that we have some pretty large events coming up, and these are what we call our signature events. The next signature event is Savor the Night, October 2nd. That's going to be right here in downtown DC. We have the Business Expo, which we have about 1,000 this year. We're expecting between 1,200 to 1,300 people come through our Business Expo at the National Washington Convention Center. We have the annual Gala and Hispanic Business Hall of Fame that's coming up in November. Savor the Night I mentioned, that's the one you want to go on our calendar and sign up for. We have the Embassy Luncheon. We have the Hispanic Heritage Celebration. We're always celebrating our heritage, the Hispanic heritage, but we do have a month that we're celebrating that, which is actually now. And then we have our holiday fiesta in December 12th. We'll have that holiday fiesta. That's the time where we let our hair down and we get to know each other and we relax and enjoy some really good food and the good networking that we do at these events. So please, if you're considering joining, come to these events. Even before you join, come to these events, because I can pretty much guarantee you'll join after. One of our mission statements, or one of our mission goals in terms of how we achieve our mission, is through the advocacy part of what we do in sort of like in the background. The advocacy is something that the team, the staff, the board members, we do things in the background to bring more resources to chamber members who are individuals and small business. And one of those things that we did this year was we teamed up with Verizon. So we have a partnership with Verizon Small Business. And if you have your phone, scan the QR code. It's a registration page for your name, email, very simple. And you will have access to 24/7 videos on business development. So you have tax tips, you have social media marketing, I think you have a video on artificial intelligence in there. You have digital marketing, how to work with Verizon. You have a number of different videos in there. And we do have a business owner who worked through the entire program that's going to be presenting on how they use the Verizon small business to, I think it was 10x their business. So you definitely take some time to go through these videos and really learn what's happening in those videos, in addition to what we have to offer here at the Chamber. So these are the partnerships that we forge and we provide free to Chamber members and to businesses here in Washington, D.C. You don't have to be a member to join this, but that's why we offer it. So with that, this is day 4 of the Business Bootcamp. We have 2 fantastic presenters. They've known each other forever, since youth, and they're great individuals to work with, and they're financial experts in what they do. They own their own company together, and they do a lot of work, not just in the DC area, but also in the southern US. They do have a lot of clients in that part of the world as well. So they have a great experience and they have a great team. So here is Virginia and Euris. Glad to have you both.
Thank you so much, Eric, for the presentation. So people will not imagine, because at my 28 years, I've been knowing Eric for over 35. So don't do the math, please. But thank you so much for the presentation. It is what we're going to be doing today. It is part of all the boot camps and the strategic planning of your business. So Aries will be doing the presentation. Here we'll be looking into what are the objectives for today. So we are going to be learning and understanding the core financial statements of our business. This is basically the foundation that every business needs to work on. And then we're going to be doing a little analyzing. Basically, because of the time, we're not going to go in depth, but we're just going to do a little bit of analysis of what do you need to be looking into your financials in order to continue growing your business. And then we will have some, we'll help you to understand how all these 3 financial statements or financial reports will be beneficial for your business. Next. I am about quotes, motivational quotes and story, because they give you a lot of information. So Marcus Lemoyne says, if you don't know your numbers, you don't know your business. So as business owner, entrepreneurs, we need to understand the numbers, not just our financial reports. We need to understand every single number going into our business. So we need to know how many sales we need to do. We need to know how many clients we need to have. If we look into the large organizations, the first things that they will be looking into business growth and strategy is their numbers. So us as a small businesses, we need to understand why this is important for us, and understanding the numbers will get you to the next level, will get you to another dollar. Let's say if you want to make from 100,000 to millions of dollars, it will be always the same metrics that you wanted to be looking at. So the amount of money, it's not the issue here, is how we do the metrics for our numbers, okay? So take that into consideration. So today we're going to be focusing in the 3 financial statements: the cash flow, the income statement, and the balance sheet. For me, they are the foundational part of your business. So if you know how to measure the health of your business, it's like, when we go to the doctor as person and on a yearly basis, we will know what's happened. And if there is something that we need to take care of, any issue with our health. So that's the moment. We don't want it to see a problem coming in to take care of. So we wanted to make sure that we understand how is the health of our business looking into our financial statement. So check this periodically. You can do this quarterly, you can do every month, you can do especially the cash flow. And we're gonna go deep in that in a little bit more. So, but you can take periods of time that you wanted to go back into your numbers to see what's happening, okay? So what is the financial trifecta? It's learning the in and out of each of this document. We will help you to achieve the success of your business and be sustainable. That's the best part. You don't want a business that can be successful today and the next month you don't know where it's going to be going. So you need to do this as a business owner. You can learn how to delegate. You don't have to know how to do it, but you need to understand what is behind every number of your business. You have to delegate, you have to work with your team. And if you outsource these services, then you have to understand how people will be presenting this to you. So, and that way you can avoid a lot of issues that we see that happens with small business setting, that they don't understand what's going on in their business because they don't understand their number. So understanding this and mastering this will help you to be very successful into your business. And we are going to start with the cash flow statement. And out of the 3 reports that we're going to be talking, for me, the cash flow, it's like the number 1. It's like, you know, when you are doing yourself, you always have that particular item in your products list of product or your services. That is the golden one. That's the one that you need to focus, because that's the one that's going to bring you the more money, or that's the one that's going to bring you the more clients. That's the golden one. For me, the cash flow is the one that is going to give you all the information that you want for your business. Why? Because this statement will tell you if you said, I want to make $100,000 or I want to make $1 million. So the formula will be the same. You just need to measure, like, how many people do I need to hire? How much money do I need to have in my bank account to pay for all the services that I need in order for me to be provide the services to my clients? So it is coming from the mindset. It's like, how do I set my mind to make the amount of money that I want as a business owner? We know that when we start a business, we want a business because we want more money, we want more time. But unfortunately, what we see a lot happening in the small business community is that we are working. So we leave our 9-to-5 job, but then we are working 24 hours. And sometimes a lot of the important things that we wanted to take care of, whether it's the family, the friends, any sport that you wanted to take, any pets that you have, you don't have time because you're not prepared for that. So working with this will help you to start understanding the process of how you're going to be moving forward into your business. So this is the foundation, basically. You can move a little bit back still. Thank you. We're going to go there in just a second. So ensures that you have the cash flow will help you to ensure that you have enough liquidity to cover all the expenses for your business. It's also help you to understand if you need to have investment opportunity, whether it's yourself that is bringing money into the business, or you need to knock on some doors to bring money to the business because you know you're growing, you have a good product, or you have a good services that is going to be better, but you need money in order to provide that. So you need to work on, you need to look into your cash flow to allow that to happen. So when we said understanding the cash flow, what does that mean? This refers to the movement of the money coming in and out of your business. We know that the other reports are basically results. So the profit and loss will get you the result of your period, and then the balance sheet as well. But the cash flow is something that you can probably dream about it, understand the market. You know, when you do your SWOT analysis, we've been working with this series of business in strategic planning. So understanding and doing a SWOT analysis of your business will help you to know what you need to bring in there into your cash flow. So the things that you will see, let's say if you're going to be, you can do a yearly cash flow. But then you have to break that down into quarters. Sometimes in businesses can be more, you can have a cycle, let's say from January to March, the sales are not going to be the same because a lot of people spend all their money in December. So when it comes January, they're broke. So they're not going to be able to buy a lot from you. So what you need to do, so those are the time that you have to take to do a lot of marketing, but you need to know how your market works. And that's how you're going to input the information into your cash flow and how it's going to be. So you need to have the money to cover whether it's insurance, rent, payroll, all your business expenses for you to make able to provide the services. You have to make sure that that money is available. That's what I'm saying, that you can have a cash flow that is done in a yearly basis, so you know what's going to happen in that year, or what are the things that you need in order to achieve that. But I will recommend that you do a quarterly one or at least a monthly. And you said, as a business owner, oh, that can be a lot of work. But the work is going to be one time. So one time that you have all your, you have set up your templates, you just have to input the information. When you are doing your closing of the months, you can take that time when you have a meeting. If you are one owner, you can have meeting with yourself and said, okay, Virginia, we need to look into our numbers. What is coming next? How much money we have there available? What we need to do? So just get that into your agenda and calendar to plan ahead of time. Don't let the time to come to you and you have to say, oh my God, what am I going to do now? So this is the beauty of the cash flow, that it helps you to understand the business and to track everything that goes into it. So the components, now we're going to move to the other one of the cash flow, are going to be the operating activities, like the money generated from the business, whether it's services or products. That's the money that we're going to be looking into the operating activity. Not all the money coming into your business is money that is coming from sale. You can have a line of credit, you can have a loan, you can use credit cards, but this money is only going to be reflecting, and you can see it when you are doing your cash flow, because when we see the other statement, they're going to be, whether they're going to be in your profit and loss or your balance sheet, but you're not going to be seeing everything together, and we go into that later. So also investing activity. If you understand that you are out of stock, that you got a bottleneck, that you cannot move forward, and you have to start knocking on doors, that's where you're going to be looking into finding someone who can get you money. Or if you need to take from your saving account and put it into your business account, then you need to find that as well. So those are the elements that you need to know. Also, if you have so much money out there, like you have clients that has not been paying you, some clients that work with the government, they might go 60 days without getting paid. So that can be a problem for the cash flow of the business. But if you don't put that into a document that you can see, or it can be an app that you can use to track that, so that you can see what's going to happen and who you need to pay, then you can get into trouble. So now we're going to be just look into a little exercise. So you understand how can you do your cash flow. And Aries is going to help us out with that.
Unmute. I'm sorry. Thank you, Virginia. This illustration, we can see in this cash flow what Virginia explained us right now. In this one, we have the ending balance positive. That means more money coming in, the money go out for the business. But I want to show you also a cash flow in the opposite situation. In this cash flow, the ending balance is negative. That means we spend more money. But we have to look in the cash flow and see what happened. Like the Virginia said, we need to ask for the client for pay more early, or make a sale, more marketing. What we need to do for improve or sell and have more income. Also, if we saw in the next line, supply and employee, does it represent more than 50% for the income? Maybe we need to look at the supply and see if we have good vendors, if we have good prices. Maybe we need to shopping around. and find out better prices. We have the payroll. We have overtime, necessary overtime. We have extra employee. We have to evaluate if we need to download that number. Also, if we saw it here, we're planning to buy equipment. This is the right moment for buy the equipment. Maybe we're planning pay cash the equipment. Maybe we need to do a loan for that. If we make it a loan for the same amount, 10,000. Oh, I put it one more, sorry. If we make it a loan, it change a positive number. But if we decide to just not buy the equipment in this moment, also change the number at the end. That change the balance. We have to evaluate our profit and loss. Also, we have a payment here. Maybe we can talk with the vendor or see if we can pay in another moment. We need to play with the profits and loss. That is the cash flow. That is the beautiful part of make the cash flow on time, because if you make it, you know what is the movement you have to do, what is the strategy you have to implement for have a profit or not have negative balance at the end. It's too many options that you have. You have also to evaluate the loan, evaluate supplier, improve your sales. You have to play with your profits and loss, know your profits and loss, take action, make plans, and apply the plans, because you can make the profits and loss, but if you don't see it, you need review also your cash flow, because sometimes we make it and we think because we do it, we don't need make any change. We allow to make change. We allow to also ask our employee about our product. Maybe we have some products we not sell it very good. We can just planning what we need to do for improve our profits and loss. If you have any question about the cash flow, please ask them in the chat.
Sure. Thank you, Aries, for that. So in overall, now we're going to state a little bit on the cash flow. So we wanted to make sure that we have a good understanding of how are we going to be managing the cash flow. So if you decided to make $1 million, that will tell you how many clients you need to have. That will tell you what's the marketing budget that you need to get in order for you to make that amount of money that you wanted to make. So how many employees you will need to have in order to provide that services to get that $1 million. So the cash flow is the first thing that you wanted to start thinking about when you start planning, doing your strategic planning to do your business. So, and always ensure you have a positive cash flow, that you have a good way to manage the capital, your working capital, because sometimes we just got signed a contract. Oh, we got $1 million contract, and then we start spending on that. But at the end, that money is not that we won the lottery. So we got operating money that we have to spend, and that's not all net profit. So we wanted to make sure that we spend less money than the money that is coming into the company. So we have control of the cost of the company, so we can increase our net profit, and you can bring more money into your pocket than the money that is going out. So avoid the overhead, reinvest the profit when it's possible. So everything will be based on what do you want to achieve for your business. So debt management, when you see what's happening in the business and you have it just like, I'm very visual. So when you see what's going to happen, then you know how you're going to be able to manage your debt and keep working in your business. So have a healthy asset management and equity management as well. So the owner of the business know one, and also, and more importantly, because it's the planning of your taxes. You know, we all know that we have to pay taxes. When you are making money, then you have to consider that into your cash flow. Whether you're paying quarterly or you're paying in a yearly basis, you want it to be in compliance with your tax. So do your tax planning based on what are you expecting to do, and review your financials regularly. So very especially the cash flow. Do some benchmarking and compare some performance with the industry that you are working, so you can understand if your business is going into a good, it's going to be sustainable. And this is the main goal that we have here with all this training that we provide to you, is that you have a sustainable business. Okay. So, any question about cash flow? So just make sure that you write it down, for we can do it later on. So now we are going to be moving into the balance sheet. So the balance sheet statement is basically the picture of the whole business. Who owes you money? Who you owe money? What's the owner's equity? Like, what do I? This is the statement that the bank, if you are going to get a loan, the underwriting will be looking in depth into this particular statement, because this will tell the whole story behind your business. How are you managing your money? So when we are managing, it's the same, managing $10 than managing millions of dollars. Whether you are selling $10,000 today and you are looking into 5 years from now and you want to make X amount of money, the steps and the process that you need to take into consideration are the same. If you are not able to manage $10,000 now, it will be a lot harder for you to manage hundreds of thousands of dollars or millions of dollars, whatever the amount of money that you want to make. So make sure that you have a good understanding of your financials. So the balance sheet has the components of liability, assets, and equity. So the assets is everything that you owe, like everything that the company has that they can make it cash at some point. So that's going to give you, but then the liability are all your obligation. Who do you owe money to? So, and then the equity is the difference between the two, if that's what the owners on for the companies and that they have, whether you are one owner or you have multiple business owner in your business, this is what you are going to be seeing. So understanding your balance sheet will help you to make better decisions for your business. So you can be more liquidity. So that's mean that any cash that you have, I mean, you can convert assets into cash really quick. So you can do any business activity that you wanted to do in order to make more sales or to make more money. So the solvency of the business, it refers to how do you meet the long-term obligation of your business, and you can continue with your business operation. So the banks are, when we have clients that they come to us and they said, like they are filing taxes and like in losses every year, the first question is like we ask, because we know sometimes we start a business and we might have some losses at the beginning of the year. So there's certain circumstances that we cannot change, or we can do, like we have COVID. So there was so many things happening when we have COVID, but those are the bank's questions that they're gonna ask us, like, how are we managing our business? So just make sure that when you sit down and have your meetings, you understand what's going on into your business. So we are going to do like a little overview again of what it is and what are the components of the balance sheet, so you have a better understanding, and you can go from there.
On the balance sheet, we have to understand the part that Virginia said, the company, the accent is the part of the company own. In that part, we have to make sure we have the cash, account receivable, any other current asset is covered the obligation for the company in short term. Short term is mean less than a year. And also for another part we have to look in the accent is the depreciation. Most of the time the company have equipment, but they don't do the depreciation. If you don't do the depreciation, you don't have the real value of the equipment or the equipment or furniture. And also in the liability, that liability, that is expenses. That is the money the company hold. And that part, we have to make sure the accounts payable is not too high. We have the short-term loans. We have to put an eyes on that too. And the part of the equity, that is the part for the investment for the owner for the company. And the equity, we see the common stuff for the owner and the return earning. That is the money for the company. If you need to make sure you not reinvestment your money, that show you if you reinvestment your money or this is a benefit for the company. That statement is called balance sheet because it need to be balanced. The liability and the assets have to be the same. If you saw it here, the asset and the liability is the same amount. If you don't have that amount the same, that means your balance sheet is not balanced. You have to check your balance sheet and understand these two. Question about the balance, the profit, the balance sheet, you can ask again in the chat. I don't see the question here.
Remember, when you're going to look into the bank, you need, whether you need a loan or you need a line of credit, this is a statement that the bank underwriting will be looking into. You can be profitable in your profit and loss. Your net profit can see like, you know, you got a $50,000 profit. However, if you go to the balance sheet and you owe a lot of money, then, you know, the banks will gonna ask you a lot of questions. So just make sure that you understand what does it mean, everything into those financial. Like if you are reviewing your accounts receivable and you see that you can run, let's say all of our financials, you can run them if you are keeping up with your accounting, which is the best things you can do for your business. You can run it like whether it's by month, by quarter, by annually, however you want. But you can see if somebody owes you. In your balance sheet is where you're going to see if somebody owes you 90 days. And how are you going to be knocking on the door of that company to pay you that money? Or if you need to take any legal action, that's the only way that you are going to be able to know what's going on in the business. So, or if you have some liability, since that had happened with some of our clients, and I like to give an example because you can look into that. So you go into your balance sheet and you can see that your credit card, you have a registration of paying the credit card in your profit and loss, but the debit never happens. So you never paid the credit card of the line of credit or any sin or any liability. Like we have seen a company that has not payroll and they have their liability, but when we are doing bank reconciliation and we look into the balance sheet, the liability has not been paid. So that can be a very high fine for you if you owe money to the IRS and you're not looking into that ahead of time. So sometimes financials are a little bit overwhelming for us as business owner, but we wanted to make sure that we are bringing this to you in a way that is very digestible, that you have a good understanding why it's important to be in the top of that. And just ask yourself the question, like, why, if large organizations are in the top of that and they know how much money they're gonna be making, and I like to put this example out there because it gives you some light at the end of the tunnel. Like when Amazon hit, I don't remember the exact number, but I think it was 300,000 million, like a lot of money. Like everybody was like, oh my gosh, there's a lot of, and they were like, we're not surprised because we prepare for that. So we plan to get to this number by this time. So we just did our due diligence, and we were able to hit that number because we were able to manage our finance. So don't get frustrated, don't get stuck, don't get overwhelmed when it comes to your business financial. You can be great at selling, you can be great at marketing, but if you're not great at looking into your numbers, then you're not going to be able to have a sustainable business, or you're going to be operating in a loss. And unfortunately, because we most of the time look into our bank and make sure there is money there, but when we're running our financials, we might be running on a loss. So not because there is money in the bank account, that's mean that we've been profitable. So just be clear about that. And now we are going to be moving into the profit and loss, which is the result of what you have done. Unless you are running a profit and loss in accrual, which most of the time, us as small businesses, probably until we hit $10 million, we're going to be working in cash. So cash meaning like we're just going to account for the money coming in and the money coming out at the specific moment. So when we look into our profit and loss, it's basically too late. What had happened there is what had happened. So we wanted to make sure that we have a good understanding of all our business income and all our business expenses. That's what the profit and loss is going to manage. Like all the money that you are, all the sales that you have, all the cost of goods sold, like the price, everything that goes into whatever you are providing, whether it's product or services, and then everything that needs to happen in order for you to sell that product or services. And then from there, you're going to have the number that is, whether it's profit or is the loss of your business, okay? So it's basically the result, how you handle everything in your business. Make sure, and something that I like to say always is like, expenses is the only thing that we can manage. Like we can stop the expenses, we can review the expenses. When we review our profit and loss, we can see if we have multiple subscriptions that we're not using. We wanted to look into our expenses. There are things that the company has it, but they're not using it, and you can you can get rid of that. We can project ourselves. Let's say I wanted to make $100,000 this quarter. You might reach $100,000. You might not reach. You might reach 150,000, but you cannot control that, until you have that call, that sales, and to your close that client. But you can control what you are spending in your business. So make sure that we have that metric taken into consideration. Okay, so what goes into the profit and loss is the business income, the business expenses, and the bottom line. We have two parts. We have income minus cost of goods sold, and we have the gross profit, and then we have all the business expenses, could be overhead and everything, and then we are going to have the bottom line, which is going to be the net profit for the business. And here is an example that Aries is going to show us.
Here in the profits and loss, the way I like it, I recommend it to evaluate the profits and loss is use the percent of the revenue because it's more easy for understand, I believe, right? Everybody's working different and understand different. In this case, sorry. The 100,000, that is the total revenue we have. That Virginia said, we need to be clear and understand revenue is not mean all the money coming into the company. We need to make sure we do the classification properly about the loan, investment, and that kind of stuff. It's something we mentioned because we saw it a lot. When we review book, we saw it a lot of person have a loan, have investment, and they put it like sales, the income. And you need to make sure you only have in revenue, your income is coming from your operation for your business. Cost of goods sold is the cost you do it for create your product or your service. And in this case, it's at 30% of the income. And the operation, we have also the operation expense. And operation expense, we have, I try to see my other, this one here. When I show you here, how that is the moving example. If I increase my cost of goods sold, my number change, and also my net profit is changed. That is the reason I love it working with percents. And the profit, you have your operation expense, you have your rent, salary, marketing, and other operation expense like maybe utilities or office supplies. A lot of stuff can be here. And that percent is important. You know the number, the healthy number for your business, because if you have a service company, your cost for subcontractor is going to be higher. Instant, a company is for sales, they sell products, the supply is going to be more. And that is the important, because all the numbers not work the same for everybody. You need to know what is your healthy number for your business. What percent you need to put it attention. And the operation income is at 27% in this case. That number coming for your profit income less operation income. You still have an income at 27%. But like Virginia said, at the end, you have to continue to deduct all the expense you have, included taxes, that she mentioned, because you can have many incomes, but if you don't have control in your expense, your profit every time gonna be less and less and less. It's important to make sure have control in your expense. It doesn't matter how many money you have for income. If you don't have control in your expense, you maybe not have a good profit. That's what we're looking for. We need to looking for what is the percent the profit I want in my business. And that way I have put a control in all other my expense. Virginia.
Okay, thank you, Ari. So when we are talking and we're working with clients, it is important for them to see this. And I have another example. It's like one analysis that we were doing with the client that was making about $300,000 a year, when we start working together and we did the analysis, he just realized that 30%, no, I'm sorry, that 10% of his income was going into meals and entertainment. So he was buying food, and now we're not talking about like food to make businesses. We're talking about providing food to the employees, which is not 100% deductible. And that's a very high percentage of your income to put it in a place that it's not going to be able to make you more money. So the return on investment, whatever you put your money, you wanted to make sure that it's 3, 4, 5 times percent what you are putting out. So looking into that, you can also see like, oh, I'm paying too much money into insurance. If you have an insurance that is really high, you can say, wow, why? Maybe you are doing, maybe you quote based on a number and that didn't happen, but still you are paying the premium at this moment for something that you expect to happen in another period of time. So looking into your business expenses will help you to navigate and reduce some of the expenses that you might have, or realize that you are having that expense. Or another case is like if you are doing marketing and if you are in a service-based industry and you paid a marketing company, Aries, remind me the Angie's List. Sometimes you pay for, what's the name of this other company that does the review? And if you are investing $10,000 there, but you are not generating X amount of money from there, how are you going to, that's the way that you can evaluate if you wanted to discontinue that service or not. So looking into your numbers deep inside will help you to be more profitable, will help you to make better decisions for your business, and it will help you to run your business in a way that you're going to be more, I will say, satisfied, because it is, as a business owner, I think it's good for you when you are making profit and bringing more money into your pocket. So to give it some time to the questions, how do we relate all of these three statements? So why are this, how are they interrelated? So if we look into this, like the income statement, the profitable part is like the income statement shows the company performance over a specific period of time. We talk like most of the time we wanted to see a year, but we wanted to look into quarterly, we wanted to see semi-annually, or we wanted to see monthly. So the net profit, it will show in your equity. It will show in your balance sheet. So when you see the profit into your profit and loss, that will be showing into your balance sheet as well. So, and another example is that the net income in your cash flow, it will start with operating activity of your business. So however you decide to look into your business, just make sure that these three tools are always present when you are making business decisions, when you are doing a strategic planning, and when you wanted to say, I want to understand my business, so you can do some research what's happening in your industry, and I wanted to grow. So this is the information that you wanted to use in order to do that. And I see that we have a few questions. So we are going to open up for question as
Hey. Okay, let's see. I can take the questions for you.
before we give the remarks.
Okay, sure. All right, so I'm gonna go through, it looks like we have, let me just let you know. Let's see, we have 4 questions in the Q&A, and let's take a look. And in the chat, we have a few more questions there. So, okay. So the first question is, which statement tells you if you are making a profit?
That will be the profit and loss. The profit and loss will tell you if you are being profitable or not. So that's the bottom line, the net profit, and into your profit and loss, that's the last line in that report.
Let
Okay.
me show you the profits and loss, and that way it can be, I think, some more. Oh, cash flow. Profits and loss.
That's
Here,
the result of $25,000.
Mhm.
So you make
So-
100, so, and something that we see it a lot, William, is like people tells like, oh, I'm making $100,000. But making $100,000 don't say that your business is being profitable or you're making a lot of money to say so. You can make $100,000, but you can spend 110.
That's so true. You may want to leave this up, Aries, because I think the next question relates to this, but let me ask the question. So I'm a little confused. Why should line items, quote unquote, total assets and total liabilities plus equity be equal to each other?
Oh,
And
that's
it's related,
balance sheet.
yeah, it's
That's the
related to the
balance sheet.
balance sheet, yeah. So again, the question is, why should line items in the balance sheet, total assets and total liabilities plus equity be equal to each other?
Notice you want to answer that. That's the account, the balance sheet formula. So in order for a business to be balanced, this is the formula that is used. You know?
Yes, you have the accent that is the company own has to be the same of the company the company liability is that is included the equity. The equity, if you remember, Virginia said that is the part of the owner. That is the part for the owner. Also, if they have any benefit, it's gonna be in that part. If the balance sheet example, the liability is more of the asset, the return earning is gonna be increased. That means the owner have the loss. That means they losing money. I don't know if he
Here that if the business owes something and whether you're going to be looking for a loan or you're closing down the business, you have to close down, you have to pay out all of your liability. And if the business does not have enough asset, that's going to be coming out of the owner's equity. So at the end, those two have to be equal. That's why it's called the balance sheet, because they have to balance. So you can, as an owner, you cannot just go move ahead and leave someone behind. So you have to give priority to the business responsibility that you have taken instead of just going and taking the money to yourself as a business owner responsibility.
The next question, we have a few more questions. Let me see, 1, 2, 3, maybe 6 questions so far. The next question is the income statement the same as the profit and loss statement?
No. So the profit and loss statement, we're only gonna look into the income of the business and all the expenses of the business. That's all that goes. So you wanna make sure that if you're working and doing and taking a record keeping of your business, you're doing accounting or bookkeeping. So when you're creating your chart of the account, this account are complete routed to the accounts that it is, whether it's an assets, liability, it's a income, it's an expense. So the profit and loss is only gonna show you all the money that the business made and all the money that the business expense. And then the balance sheet is going to show you what everything that you own, like everything that whether you have computers or vehicles or you have anything that it's not tangible, and then everything that you owe to people. So whether you have vendors or you owe to the any estate agency, and then the equity of the owner.
Mhm. The next question is, what tool might you recommend for a new business owner to help with finance? Is Quicken one option?
Well, it depends. That's the devil advocate questions. Like, it depends how is you started a business, you wanted to keep control of all your finance. You can use templates from Excel, which is going to be the simple way. Make sure that you have a formula template, or you can use, there are several ways of software out there. It's Wave or QuickBooks. So there are several. So the ones that is more, that is going to be convenient for you, but this is going to be case by case. If you just starting, just make sure that you are keeping track of every money that you have, every money that you get, you yourself invest in the business, and every money that you spend. So can be from Excel to QuickBooks to Wave to any other app out there, any other accounting platform that's available for small businesses.
Mhm. Thank you. The next question is, I'm interested in a relationship between the statements. For example, does net cash from cash flow statements also show up in the profit and loss statement, or does it show up in the balance sheet?
So your basically, yes, your cash flow, it will show the net in your profit and loss. But your cash flow, it will be, you're creating that. If you have historical, you've been doing your accounting, and you can pull out all the information for what had happened into your business, you can create your cash flow projections from there. But if you are new into the business, you are going to start thinking about what do you want to achieve in your business, how much money you wanted to make, and you have done all the research when you are creating your business plan and all the services that you need in order for you to accomplish the amount of money that you wanted to make for your business.
Thank you. Where does the owner's salary show up in the sheets? Or which sheet does the owner's salary show up?
That's a great question. It will depend the business structure. For instance, if you have an LLC, the owner salary, which cannot be a salary, and we call salary as a W-2, that will call owner draw, will show up in the balance sheet. It will not show up in the profit and loss, because as an LLC structure, single member, you are not supposed to be on a W-2 based on IRS rule and regulation. So you are not a business expenses, because this type of business structure, you are a pass-through. So everything that happened in the business will be passing through you into your personal taxes. If you are an S corporation and you decide you have to be a W-2, but let's say you are going to be paying yourself a salary that what IRS state is like, if you're going to pay yourself a salary, it has to be a salary that somebody else that needs to be the job, it will do it for that job. But you can also do some dividends. So the salary that you get from the W-2 will show up in your profit and loss under an S corporation, and the dividend will show up in the balance sheet as owner draw on payments.
Okay. So we have a few more questions. What percentage range is good to know when deciding to reinvest your business profits?
That is depend of the company. We have to see the company normally is going to 20-50%.
It will depend the company, what the business wanted to achieve. It's always going to be what, as a business owner, I'm not going to take the profit because I wanted to hire an employee. I wanted to have an assistant to help me out. So instead of me getting $40,000 out of the business account, I'm going to hire someone who's going to help me out with some of the daily operations. So I reduce the business loading, and I can increase that 40,000. I can make 150,000 out of that. So it always depends what you want as a business owner.
Cool, thank you. So daily reviews of your numbers is a defining of good business practice to maintain.
That will be crazy. So you're gonna end it up with no here. You can, something that I do recommend is checking your business account daily. Just looking into your, just a screen snapshot of your business account, what's happening there. But you don't want to go into that unless you are the bookkeeper or you are the accountant that you're working with that. As a business owner, you wanted to, you can do weekly, or you can do, it depends what you wanted to achieve again. So if you are having a lot of money coming in, you want to say, okay, I'm going to look into my numbers on a weekly basis. If you have somebody else handling all your accounting base, you wanted to understand what's going on, where the money is going, how much money it's coming in. So you can do weekly, we can do every 2 weeks. Again, it'll depend what's the purpose of that is for you.
Mhm.
Or what's your purpose?
Should you be working on these forms with a professional, or is this something that can be managed independently?
You know how to manage that, and you have the bandwidth to do it. As business owner, I'm more like we wanted to work on our business, not in our business, as the good saying says. Like when you are taking time, like if you're going to be spending 5 hours doing this, but those 5 hours you can hire someone to do it, or you have another someone who you can delegate to do so, because those 5 hours are going to help you. You know what your strengths are as a business owner, and you can do business development. Maybe investing that 5 hours doing business development will get more money into the business than what you are investing on spending that time into managing this independently. So once again, unfortunately, every question will be these are not questions that we can answer like, oh, this is how you have to do it. Like it will depend on every business. We meet with clients monthly. We meet with client quarterly. We meet with client in a weekly base based on what each client wants to do with their business and how they wanted to manage that and the result that they're looking for. So if you feel comfortable doing and you think that you can handle that, great for you. But if you think that you can make more money doing business development or PR for your business and bringing more money to your business, then you wanted to think about where are you investing your time. Time is money.
Yeah, and if I can add to your answer is when you're trying to manage this element of your business, not everyone are experts. We're, as business owners, like myself and Virginia, Aries, we're not experts in many different areas. So we hire other people to do the things that we can't do as efficient as others would. So for example, Virginia and Aries, they own Adaptive, and these are things that they do. They manage books, they look at these things, they answer these type of questions. And if you're not comfortable in doing that, then maybe you want to have some advice from experts like them in your business. The same way when we're looking at a legal contract, we're not attorneys, but you definitely want to consult with an attorney on some level. So it's probably the best idea to engage with someone that has that expertise, just to be sure that you are sure in how you run your numbers and your business. Cool. So next question is, hello, Virginia. That's the question. How often should a small business perform a budget analysis? Should it be weekly, monthly, or quarterly? And how often should a new business owner see a tax specialist?
Okay, there is 2 parts of the question. So for your budget, I'll recommend that you do, and once again, this is very generic. This is not, it depends your business, but you wanted to start doing how much money you're coming into your business. You want to maybe do weekly, or you want to do monthly budgeting, that you can go and check what you have, the budget plus what is the actual. So we wanted to verify that what we have budgeted into the business then we wanted to, when it happens, we can go back and just verify with the actual of the business. So a good time will be monthly, but again, it will depend on your business and what stage of your business you are. But at least monthly will be a good amount of time for you to go back and check, because you have to do the closing of your business in a month regularly. So monthly, so you want to make sure that everything that came out of your business, then you can check your budget and you can say, yes, that happens. I budget that I'm going to be spending $500 in marketing, but instead of $500, I ended up spending $700 because there was, this is a season that my business, I wanted to do more branding, and I wanted to put $200 more there. So always have to have very intentional where your money is going. So weekly, monthly, and then how often should you want to see a tax specialist? When you start your business, if you're looking into your number and you are being profitable, I will recommend that you start speaking with your tax professional ahead of time so you can maximize your money. We are not trying to give advice here as tax professional because we are not, but you wanted to maximize the amount of money that you are paying to the IRS. We are not trying not to tell you not to pay taxes because this is our obligation, but there is a lot of legal way for you to maximize the money in the business. I said, if we are looking into the end of the year, so we are almost entering the last quarter of the year. As a business owner, you wanted to go and look into your numbers way before the year closes. So if you have a good profit and you need to buy an equipment, this is a great time to do so. If you need to hire someone and you have money in the business allow you to do that investment. This is the time to do so. You don't want to wait until we hit January the 1st to look into that, because that's going to be too late. And whatever it says in that profit and loss, that's what it is. Before you can make good business decision. So look into your tax, especially as soon as you register your business and you do your projection, you can tell your tax, especially I'm projecting that I'm going to be selling $100,000 this year. Whether you have a W-2 or you are just one single member, then because as an LLC, there's other stuff that goes into your taxes. That's not just the business related. So the tax especially will tell you how much taxes you will pay if you make X amount of money, whether it's $10,000, $1,000 to whatever amount it is.
Yep. Thank you, Virginia. I'm sorry, the next question is, where might a new business owner find a tax specialist if we don't have that resource in our network?
Just as William, we have tax professionals, CPAs, and accountants in our network here that you can be referred to.
Yep. And I mean, if I can add to that, you definitely want to ask other business owners if you know who they're using. But what I recommend when people ask this question is, number one, do your own research, because you do have professional organizations. Like there is a CPA professional group across the country. You can actually visit the chapter, look at the chapter, and find someone. The most important thing about selecting a tax specialist or bookkeeping services or accounting services, like what Virginia and Otis does on a day-to-day for their business, is you want to develop a good trusting relationship with these businesses, because they're going to look into your private numbers. So you want to build that relationship, you want to build that trust, and you want to have someone that you feel you're comfortable with. So sometimes a referral may not work for you. Sometimes doing your own research, you may find the best person that you can connect with. So Veronica,
Yes.
it's this question. My
We
Spanish
have a
is
question here in
not,
Spanish, and
yeah.
if you guys can answer it in English.
Okay.
Okay, you can answer in Spanish and then translate it in English, the answer. Could that be possible? Okay. Cuando empezamos una LLC en empresa de servicios de una sola persona, ¿Desde qué año promedio podemos más sentir más ganancias en las ventas? Creo que quiere decir es que cómo hace que ganen en un año más ventas. O sea, pueden ver cuánto ganan en un año.
Todo, me siento como el abogado del diablo, como dicen en la película, because everything it depends. Like, it depends what industry you are in. O sea, voy a responder en español y luego voy a traducir. So, va a depender de qué tipo de industria tú estás. O sea, cuando tú vas a iniciar un negocio, lo primero que tú vas a hacer es la investigación de qué está sucediendo en esa industria, quién es tu competencia y cómo tú puedes mejorar eso para que cuando tú vengas a hacer la penetración en el mercado, pues ya tú hayas hecho todo, que ha creado un momentum para que la gente quiera venir a comprarte. Tú tienes que hacerlo primero. Cuando empezamos un negocio, no nos queremos lanzar así como de una. Nosotros queremos probar que vamos a vender y que vamos a tener clientes, porque un negocio sin clientes es un hobby muy mal pago. Entonces, a partir de ahí, cuando tú estás haciendo tus proyecciones, eso va a determinar el tipo de mercadeo que tú vas a hacer y cómo vas a inyectar, cómo vas a crear awareness, dónde vas a ir, si vas a ir a networking event, quién necesita tu servicio, cómo tú le dejas saber a todo el mundo, hey, yo estoy aquí, puedes utilizar mi servicio y estos son los beneficios que mi servicio tiene para ti. O sea, tú puedes ser rentable desde el inicio. Lo que pasa es que a veces, dependiendo del tipo de industria, si es de servicio o si es de nosotros tenemos que inyectar capital y eso, si lo depende en el tiempo del año que empecemos, recuperar ese dinero pues puede tomar un poco de tiempo, pero lo bueno es que cuando tú tienes tus proyecciones y haces lo que necesitas y evalúa lo que está sucediendo, puede ser que el mercado no esté favorable para ti por X o por Z, dependiendo del tipo de negocio que estás. Estamos hablando de una empresa de servicio. Vamos a suponer si tu empresa una empieza de servicio de jardinería en enero, no vas a tener mucho resultado porque nadie está cortando grama. Por lo menos el que vive en la Florida tiene todo el año. Pero en esta área que estamos de Washington, D.C., nadie empieza a cortar grama por lo menos hasta mayo. Por eso siempre va a ser depender. So the answer to this is like, when do we start making, seeing the profit in our business when we start? So we are speaking like, it will depend on the business. So you wanted to do your SWOT analysis before you will start your business and have a concept proven that you are going to have clients needing your services or your product. So you have already sold something, somebody have told you this is better than this, or if you have the service that you provide, so you can be profitable from the first moment that you open your business if you do the right thing. And we are going to make mistakes. So when we are doing business, we need to just tirarse. You just have to launch, you just have to do, and you got to measure what's going on, what's working and what's not working. We're not always gonna, we might make the decision that we understand is the right decision at the moment, but it is not. But it's part of the learning curve. Like nobody in a business, I like to give example like of large company. Like we all know Amazon lost money for the first, I think, 6 years. But they knew what they were doing. They have a strategic plan and they knew how they were investing their money. I don't know. I can't tell you how much money Amazon is making right now, but we know that the owner just bought a boat like for $350 million. So the business is doing sort of good,
Okay.
right? So just understand your market, understand your clients, what your clients want, what is not, what is out there in the market that your client is not receiving that you are going to be able to provide, that you're going to be better, and not of the one that say cheaper. And I don't believe in being the cheaper is the best thing, because then you have to work harder to make more money in the long term. I'd rather have less client and sharp because they value more. Sometimes like the mindset of the people buying when you have a shit product in hand is like it's not good quality, or there is not good services, or they take advantage of you because you don't sell, you don't value you don't worth yourself, and they will take advantage of that.
Cool. Thank
you.
you. And we have, I think we have one more question. How long should you keep up with an unprofitable business?
That is the same thing Virginia said at the beginning. Depend on the business. Because sometimes, example, if you are in technology at the beginning, they don't make good money, right? But in the future, they do. It's just the projection you have, what kind of business in what area you are. It depends business to business.
It will go, we are attorney today, it depends. You know, if you have a business in your hands that you know that at some point is going to explode, but if you have a business that you have, you know, keep trying and trying and trying, then you wanted to, if you have, you wanted to try something different, maybe add a new service, add a new product, or find out what's going on that you're not being profitable. Are you spending more money than what you are making? Are you giving a very low price? So why you're not being profitable? You have to look into the numbers to see why you're not being more profitable. Like you're not having the amount of sales that you requires in order to comply with all the expenses that the business is required to be in. So these questions are sometimes hard to give you a hard answer because we cannot speak without seeing what's going on in the business. Unless I can see why you are not profitable, I have no clue why you're not profitable. Maybe you're selling too low, or maybe you are not reaching your goal sales. So if you need to reach a $5,000 a month because you want to break even, but you are not getting there, then we have to see what's going on in the business in order to say, like, you know, I think you wanted to switch either model of business or product and services, or you wanted to reconsider keeping up trying with this because this is not going to go nowhere. We cannot give you like a simple answer just by the question. But Eric says the services that the chamber offers, if you can get that. And Eric can tell you more about that.
Yep. We don't have any more questions, but that's a good point. Let me put in here, let's see. I'm going to put in here the link so anyone who's listening or on this webinar, I think Veronica already put it in there, but if you go to this link, this is where you can scroll down and you can actually sign up for complimentary or free business advising services through the chamber. And we have it in English and Spanish, of course. And we have consultants like Virginia and Elise who actually advise clients in a bilingual manner. So all you have to do is go there, click on that link we just put in there. You can sign up for the service. You have to you pretty much fill out your business profile, and then it goes into our system, and then I will assign you one of our advisors that you can work with depending on your need and depending on how we rotate the clients. So we have two last questions while we wait before we close out. Would you, and Virginia and Odis, if you can be really quick with these answers, that would help because we have, like less than 10 minutes before we close out. Would you use the same method if it's a nonprofit versus a for